Are we Gucci or nah? We're not. We're not. We're not. We're not. I think we're Gucci. Get a link and put this thing and be on our way. But what? But what? Reclaim value area low or cooked. Boom, done. Bump, 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 bump. Update our levels. So I don't know if anybody watched the new Moonshots podcast today. God damn, that show's interesting as hell. Interesting as fucking hell. There's a company, essentially, they do consulting for companies that are developing products. And basically what they do is they simulate a bunch of humans using AI models. So like, for instance, the example they used was strollers for mothers, for babies. And they simulated like a bunch of mothers. And then eventually they use these models to determine like which product is the best to develop. And apparently it's doing an even better job than like polling humans in terms of like the accuracy of what the best product is going to be. And they're doing it across all kinds of different product lines. Yeah, all kinds of interesting stuff today, to be honest. That was a really good, I like that podcast a lot. Really fucking with that thing. Okay, where's the POC? 6-0. Not from the sun. From these stop loss fires. And we're gonna get caught up on the rest of this stuff and then be good to go, y'all. The value area low is what? 63451. Okay. Yeah, in terms of where we got off, big soul fucking perfect wick to this thing, right? It's right at 382. So first of all, if you took the long on this like the candle close above this level, like you would have got out break even, worst case, right? That's why we put our stop loss break even, so you don't get got from shit like that. And the thing about this move up, like obviously we didn't talk about it in advance, but if you're watching the open interest, all the shorts that we were talking about that got closed out were all closing up here. So yeah, like much more inclined to take the trade up here when that's happening, right? So if you took it with a limit right there, you literally got pixel perfect fucking entry right at the tip of the move. And if you did it with the kind of plan that we talked about, you could have done it a couple different ways, right? Because if you're looking at this on a lower time frame, it did like a head and shoulders down here, right? You could have just hopped in, ding, 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 just hopped in right away. Or you could have hopped in on the breakdown of yesterday's VWAP. So we kind of covered all of this, right? Kind of covered all of this ahead of time. So if you got in that thing, shout to you. And in terms of the long, this is the level, right? We talked about this level in the higher time frame. Let's just draw our little fib. we had our yellow box, like where? It was like here, right? So far, so good in terms of holding this level. So yeah, everything's going according to plan as per usual. Get rid of this, get rid of this, get rid of this. We'll mark out this thing. And you know what? Now we're about to sit here and watch, right? Is this thing gonna reclaim the weekly value area low? Are we about to fail and start reclaiming this bitch? We're not. Our new mouse did not come yet, so we're still stuck with this fucking thing, which is annoying, but whatever. Other than that, nothing much I got caught up on. Oh yeah, I did get into the Cerebrus thing. Where is it? Bing. Pretty similar setup to the stuff we were talking about last week, right? Come down, sweep the previous day low, and it comes back and reclaims the VWAP. So I got it like right here on this candle. Kind of just been sitting in it ever since. We have earnings tomorrow, so we'll see if we can get like a nice little pop on the earnings. Because our CoreWeave trade got that, right? Got quite the mega pump after hours today. Dun, dun, dun. Yeah, things up 15% after hours, so feels good. Feels good. Other than that, I haven't touched anything else. Everything just kind of remains the same. Yeah. And we are all caught up. I was also watching this thing. Where'd it go? But yeah, nothing particularly interesting going on here yet. But we'll continue to watch this out of curiosity. Dun, 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 dun. But we'll get caught up on some of this other stuff in a bit, because I wasn't around too long today. I got into that trade like once I got into this Cerebrus thing, I kind of just cut. The rest of the day I had shit to do. This is my first time kind of just on settling down for the day. So I need to get caught up if we miss anything interesting or any interesting trades developing. Yeah. Tomorrow is the inflation data. Boom, 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 boom. We'll leave this alarm up here for now. Also, how is this looking? Okay. Might as well look at some of this data real quick. Because the thing about this move right now is I mean, honestly, the same kind of thing we've been seeing over and over, right? Like every move down, there's like just a massive ramp up in open interest every time. And like this leg down, like the same kind of story. But it's not like yesterday where everyone shorted like the exact fucking bottom. Today, like it was ramping up on the way down. But I'm curious to check out how many longs are involved in this. We'll kind of take a little peep at that. So I'll log into Exo over here. Interesting. These four candles quite interesting so far. 700. Whoops. Is that even right? Yeah, just double check this on our laptop because this web browser can be a little fucked up sometimes. It doesn't look right.
Luxury paranoia, I sip white scream, I don't chase that pump, I fade that dream. Your bag too loud, your chart too green, my entry chill, my zone too clean. Smoke from the wick, I seen that fake. Mass head stall and profit break. You prayed up, I stayed mad. Now I'm cruising slow with the city black. VWAP hold, I rotate like Delta leaning, I fade that spike. They want thrill, I want the plan. You want rush, I want.
Let that load. Okay, a lot of longs open here. So far they're chilling, and also like a big cluster open here, but like one of them closed right away. Interesting trade to get out right away, right? Very odd. So I want to double check it to be sure, 'cause it seems a little weird. Put this on a lower time frame. They did. Wow. Okay. Okay. Honestly, same story as yesterday, to be quite honest. Pretty similar story to yesterday. Bum, 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 bum. Yeah, a lot of longs here, and then like a lot of shorts here, and then some shorts here. Well, all the longs right now are chilling, right? So we'll kind of be mindful of the open interest on this retrace. But although I feel like tomorrow's inflation data is going to be probably like the main thing that's going to pick the direction here. Bum, 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 bum. 500. Okay. We'll see. We'll see, right? This is the key zone we're all going to be fighting over at this point. Where's the VWAP from up here right now? In terms of the lower time frames, shout out to the math though, right, guys? Shout out to the math. We talked about this yesterday. I don't know how much easier I can fucking make it at this point, honestly. God damn. What is this? 6, 4, 5. Yeah, the yellow line. How's the order book looking up there? 6, 5, 6. Hmm. I mean, obviously we'll do the juice box at the end, but seems like there's nothing particularly interesting up until these two zones. We've already talked about these, right? Boom, 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 boom. Because if we start breaking down from here, like, quite likely are not going to be entertaining along there. It's just too risky. It'd definitely have to be like some kind of like reclaim of like the VWAP with like the same kind of thing today with like some reversal structure printing. Unless all the OI like resets when we clear this zone, which doesn't seem like it's going to be honest. Dun, 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 dun. I guess we'll see. I mean, at the end of the day, we don't know where everybody put their stops, but we'll have to just wait and see at this point if we even go lower. This is kind of the main thing we're watching for right now. And I can't wait till this mouse comes. God damn. God damn. Where's this thing? God damn, god damn. Understand. Also, did anybody watch that Black Hat video about like the Hugging Face incident? From like the OpenAI security researchers? God damn. Pretty interesting actually. Those things were scheming. Where's this damn video? Fuck. Invest. Like the best. We'll just go to the channel and find it.
Of this idea that like people are going
Close this. Pause this. Switch this.
to vibe code their own shit, like and whatever. Like that isn't the issue. The issue with SaaS companies is every single day that you are hitting your plan, you are destroying equity value. Like think about that. Our whole careers, we learned you lay out a plan, you execute against it like relentlessly and violently. You hit your plan or you seed your plan, and you keep on building that, and that's how you build equity value. And now you're just like every day you hit that plan, you're fucking up. You're fucking up. You're destroying value.
I love asking you and all your partners this every time we hang out, which is, okay, you've got these singular investments. You don't do that many investments each per year. And then the ones that go into work, like so far Sierra and Fireworks certainly are, you get to learn so much about the world through the lens of the company. Yeah. So I'd actually like to do both of those, maybe starting with Fireworks. What do you know, or what have you learned about the world and how it's reordering itself based on watching the world through the lens of Fireworks that would maybe be surprising or interesting?
These are 2 trillion, 3 trillion, 4 trillion parameter models. Well, it turns out running those models is damn hard. And running them efficiently is like super hard. And the way to see this, and everybody can see this, which is everybody from AWS to Azure to GCP to the NeoClouds to the Fireworks-based ent-togethers of the world, like all of them, they all run these stock open
Oh, so how did
models.
this like this finish? Where's this thing? I think I had like an earnings pump too. Whatever. Whatever. I mean, good thing we took profit up here when we did. But yeah, this thing might end up running, right? Especially if it does one of these. Yeah. So we'll keep our eye on this thing tomorrow. Out of curiosity. I don't know if I'm gonna have time to even entertain this stuff in the morning. I gotta go get some stuff printed like right when the day starts. Fuck.
That are available in their developer pools and everything else. And like, that's what it is. And the performance difference for a Fireworks versus like a cloud provider is like 5x. And that is just the speed performance. Then you add on top of that the like throughput, which is not visible externally. It's only visible if you know the economics of these businesses. And you're like, wait a minute, this is the same open source model with the same NVIDIA hardware, and there's a 5x performance difference and a multiple x throughput difference. And and the way to just simply understand that is like these companies are paying the margins of the cloud providers and running on top and making money. Yeah. And so like, how can that be? Yeah. And so what I think my big takeaway on it was like, wow, this stuff is actually really hard to run. Like it's just really hard to run. And and there's a lot of expertise involved in doing that, and it's kind of like this very specific expertise that exists, and it is the kind of thing that when you look at it as an investor from the outside, and we should talk about like early days of AWS, but like when you look at it from the outside, it's like this is a commodity. This is just as like pass-through resale. Scale game, like whatever. Like this doesn't. And you're like, oh wait a minute, no, it turns out it isn't. It isn't at all.
Do you think that's just a moment in time thing? And I'd love to just hear you. I'd love to really riff on like cloud. You watch cloud very carefully and closely. You know a lot about it, and the adoption curve there versus how people use these things and the nature of those two businesses in comparison. It's tempting to say like there will be one or two scale winners, like there typically have been in a commodity market, where cost to serve is everything and scale drives cost to serve down, and like that's the whole story.
I think the AWS example is so good. Okay, so 2006. You have S3 and EC2 launch, right? Their compute platform and their storage platform. Those are the first two AWS offerings in 2006. And you kind of start talking about it in late 2006 or whatever. 2006, 2007, I think the 2007 annual letter, like Bezos talks a lot about AWS and why it's important, why it's interesting and everything else. And the investor reaction is just not good. And I think if you put 30 of the smartest investors at that time in a room and ask them, like, what's the probability that this AWS business is a good business with durable long-term margins and like super interesting and everything not commodity, I think you would have gone 0 for 30 with really smart people that you and I know who were around at that time in 07. Okay, fast forward from 07 to 2014. I joined the venture business in 2014, and a really common narrative in 2014 was, oh my God, AWS is going to eat everything. There's no enterprise opportunity left. It's going to eat databases and infrastructure, but it's going to eat the apps too, and they're going to offer it the cheapest and best. And you got to remember, like we all had these like amazing SaaS and software businesses that we were involved with, investors, and part of the reason people loved them was they were annuities and they ran at like 85% gross margins and like everything else. And so it's just like, oh my God, AWS, Amazon can offer things at like 8% gross margin, and like they're just going to crush this whole thing. Your margin opportunity, like the whole thing, whole narrative. And think about from like 2014 to now in enterprise. Okay, like of course you have Snowflake, direct competitor to Amazon Redshift, ran on Amazon. You're out Amazoning Amazon on Amazon, okay? But it's not just Snowflake. You had Confluent and Elastic and Mongo, Databricks, all of these companies. Okay, amazing. That's the infrastructure layer. Then you have the whole app layer. In the app layer, like think about offerings that they offered at the beginning. Datadog, $100 billion company today. Like they had a competitive offering, right? And they did it. And of course, there was tons and tons of roadkill. There was tons of roadkill. They did run over a bunch of stuff. But even then in 2014, the thesis was, the view that AWS was going to eat everything was massively wrong, not because of all the examples I just mentioned. It was massively wrong because Azure and GCP were irrelevant then, and fast forward to 2026 and they're unbelievable businesses. So now, is AWS the biggest? I think it's like a 40, 30, 20 split. Yeah. You ended up with an oligopoly of that. And even outside of those big three, you have Cloudflare, which is a cloud provider in a different sort, which is another $100 billion company. So you have these like smaller players that emerged as $100 billion companies outside of it. So what's the takeaway? The takeaway to me is like, oh, there's just a bunch of like kind of zero-sum thinking and not realizing like how big, what if it all works? What if it all works? And so it all works. And of course, like getting the relative winner right matters, and there was roadkill and there were companies, so it's all those things still matters. I'm not saying like it's just like, like spray and pray, I'm not saying that at all. But I'm just saying like the market was so big that one vendor could not scale and consume it all. And they just couldn't consume the whole industry. Now, I just like, again, like it's different now and like all these things. But if I just like, just that whole notion right now with what you and I are seeing in AI, sure feels like it rhymes, right? It's like
Anthropic's going to do everything.
Right. It's like it can't. Like really? Like is that really right? To me, that view that it's just like, oh, this one company's going to eat it all, this doesn't hold. And I would tell you that scaling, while cloud scaled very quickly, cloud did not scale anywhere close to as quick as what's happening right now. And so, just for that company to actually scale and deliver it, scaling in this case requires like a ton of infrastructure buildup, right? From like energy, like power, shell, chips, memory. Obviously the algorithms and everything else on top. So it feels to me like we're going to end up with an oligopoly of winners, and there will be, I really believe there will be these like $100 billion crazy smaller winners. And so like that's like that. It just feels like that the same thing is kind of happening.
Can you talk about it also from the demand side and compare it to how you watched cloud get adopted in enterprise versus how you're seeing AI get adopted now?
So if you kind of go back to like 2010, 2011, like even now you're like 3-4 years into AWS being offering, enterprises were super skeptical. Like traditional enterprise, blue chip enterprise. You had digital natives out here, you had new companies forming that were like using the cloud, I think kind of famously like Snapchat was built on GCP, and I think at one point in this era, maybe 2012, 2013, 2014, like Snapchat was like 40% of GCP. Like it was just like those kinds of things were happening.
That's like Cursor being 30% of all these things.
100%. Same exact thing happened. Yeah. Same exact thing happened. Enterprises were very skeptical, I think, of cloud until like they really, by 2014, 2015, 2016, it was like, oh yeah. Then I think the big banks and financial services and insurance companies and more conservative blue chip enterprise were like, oh wait a minute, this is actually different, and we're gonna have to pay attention. And it became an issue in recruiting for them because they couldn't get the best developers because best developers wanted to work on the easiest platforms, and all these kinds of things happened. And so the difference now feels really profound to me, because while it is 100% the case that blue chip enterprise AI is not like well absorbed and well adopted, and not the same thing as going to Cursor and walking the halls of Cursor versus walking the halls of a big New York financial services firm in terms of their AI use. They want it. They want to figure it out. They're running experiments. They are spending against it. They're trying to figure it out. They're talking about it. They're not being dismissive about it. And I think they view it probably as more of an opportunity than they did the cloud in terms of the potential impact on their business. I think they probably view it more as a threat than they did the cloud. And maybe they just also learn lessons from the cloud in terms of like what's possible here. And so I feel that they will continue to try to figure it out and absorb it. Having said all that, I do think one of the more interesting things, if you go from Silicon Valley out into the world and talk to these companies, these enterprise companies, and you realize like what the pace of adoption is and what the barriers to adoption are and everything else, is I think that like there's a ton of opportunity to help the enterprises get there. To be one of the things that I tell the companies I work on is like, hey, let's be their AI Sherpa. Let's be their AI Sherpa. If we're in that position to be their AI Sherpa where we're crossing both worlds, that's very valuable. And I think that'll continue to work.
Ramp is the only platform built to make your finance team leaner, faster, and better. Saving businesses 5% annually on average, so you can stay focused on growth. Ramp customers grew revenue 3.2 times faster than the average American business. Visa, Vercel, Cursor, Stripe, Notion, 11 Labs, Shopify.
Oh, so it's just like these people that they...
Mine does too, and so should yours. Learn more at ramp.com/invest. The best AI and software companies from OpenAI to Cursor to Perplexity use WorkOS to become enterprise ready overnight.
Yeah, these people were on that that mountain climbing documentary.
Not in months. Visit workos.com to skip the unglamorous infrastructure work and focus on your product.
Forgot about
Felix by
that.
Rogo is a personal finance agent that turns a single prompt into finished client-ready work using your firm's own templates, context, and standards. Send Felix an email like, take these comments and turn them for me, or update my tracker with the context of these emails, or run the ability to pay math on this buyer, and Felix sends back finished PowerPoint decks, Excel models, and sourced research. Felix works the way your team already does, delivering work quickly and accurately around the clock. Learn more at rogo.ai/Felix.
What is Sierra teaching you about the adoption of this stuff? And it's kind of actually, it's really interesting contrast to Fireworks, where Fireworks is the sort of infrastructure provider. Sierra is feeling its way through what are really cool things that we can do for end consumers, enable companies to do for end consumers, starting with customer service, but I know with Horizon now, going beyond that. Again, same question as for Fireworks, like what do you know that the world doesn't fully appreciate because of how you've seen that business?
Well, I think this is it's a great example. So first of all, like my partner Peter and Brett, I think this is their third company working together. So it's like a 20-year relationship, which is just like an amazing and great place to start. And one of the things that I think makes, Brett so special is, and the team is, they're technologists, but they actually have like lived in enterprise world for a long time and like really understand it and everything else. And I think actually he's personified this whole idea of, hey, let's be their AI Sherpa. Like let's start with customer service, we're very automatable, and like be their AI Sherpa. And now we have these long running agents that can do with Horizon that can do more and more stuff. And one of the things that I think is most interesting about this to me is, yes, it's an application company on the surface, but they're doing real AI work. They're experimenting with models and they're building agents, and they're very close to the metal of the models and the capability and the harnesses, and they're understanding the jagged edge of AI capabilities, which is very different than the human smooth arc that we understand intuitively. They understand that jagged edge of capability and they build around it. You saw the evolution of Cursor from like IDE to like tab autocomplete to agentic work like over and over and over again. They were obsoleting their work from like 6 months ago, and it's what Brett Taylor calls like sandcastles, right? We used to be building castles, now we're building sandcastles that are gonna get washed away. And that's, if you don't think of software that way, you have to embrace it. Because if you're an artisan and you're like, hey, I built these like perfect foundation of castle and there's bricks and it's like perfect and I really care about this and it's gonna be here for 100 years, you're just not gonna make it. So as you get emergent new properties in the models, which is, you get a new, every 4 weeks, you get new capabilities, they understand that jagged edge, they understand that application of that jagged edge or that valley to their customer base, and they're filling in those gaps and translating it. You can't just be superficially applying things. I think it's actually a complete inversion of how product development used to work to how product development happens now. And product development, it always used to be you'd also say like, hey, product managers, you train, the product manager shouldn't, should understand the technology, but like really shouldn't be thinking about implementation and shouldn't be specifying implementation, shouldn't be doing this and doing that. And the product manager's job is to really understand the customer and translate that problem to the engineers so that the engineers build a solution. Like that was traditional product management. Like good luck doing that now. That's a horrible way to do it. You can't do it that way. You actually really need to understand the nuances of model capabilities, what they're great at and where they fail, and you need to understand the customer problem and put those together and bridge those gaps to build valuable solutions. I think that's one of the things that Michael and team at Cursor did so well from the very beginning, is they really understood the jagged capability and built a product that allowed that translation from developer to that jagged capability and kept on iterating on that as the edge changed.
It's kind of ironic that like all that sounds like the returns to being technical are going up, even as models supposedly are taking away technical edge.
Well, I think there's two things. Yeah, 100%. And actually, I think there's this weird thing where there was this whole discussion about like the traditional roles of product manager and designer and engineer and like whatever it is. And I think what there really there are people who understand customer problems, people who have taste, and people who understand the jagged edge of AI capabilities and are curious about it. And like those are the three things.
You've got those three.
If you have those three things, you're going to do great. And it doesn't really.
Is that true? Is that true? Like, I suppose in the longer run, maybe, but I don't think that's necessarily true as of now, right? Because there definitely is some merit in having like an understanding of, like technological background in terms of engineering. Like, sure, you can like vibe code some app, right? But everything is done in some inefficient manner. Then when you go to scale it, you're just gonna have to like undo a shit ton of tech debt. So I guess the question is like, A, are the models already accounting for designing things optimally on a large scale from the get-go? And like B, can they quickly refactor everything given the tech that exists? Probably can, right? Yeah.
Really matter if you're an engineer or a product manager or a designer. But if you have taste and understanding of customer problems and understanding the jagged edge, you're going to do well.
When we first did this so many years ago now, which is crazy, it'd be fun to revisit some of the ideas that we talked about the first time with SaaS. But you use this term that I've used ever since, which you called it the competitive frontier, meaning like the things that will determine the winners and the losers. My partner Bree has this great idea that's stuck in my head, which is that everything is a jump ball right now.
Yeah.
And I'm really curious, in addition to this like idea of sandcastles versus real castles, what else you're seeing amongst the people that are becoming competitive winners? Like, is it different? Are the traits different for winners now, personality-wise or business strategy-wise or business model-wise, versus what you learned in the SaaS era?
I'm very dismissive of this idea that like people are going to vibe code their own shit, like and whatever. Like that isn't the issue. That isn't the issue at all with SaaS companies. The issue with SaaS companies is the competitive frontier completely shifted, and everything they thought they were building against and would make them win are not what's going to make them win. Let's take databases. Like databases have been a phenomenal area for software for a long, long time. Great margins. Why? You had app developers that would build against these specific database interfaces that existed for that database. You would have more and more data over time, and so migrating an app from one database to another database was a giant project that was like very, very difficult to do. And so these were unbelievably sticky businesses that you could generate a ton of margin in, right? Of course, you got Oracle and SQL Server and a whole slew of smaller players like that did really, really well in databases. Well, let's think about that in the context of AI. So like now, you don't have a developer building against a database interface. You have Claude or Codex building against a database interface, one. Two, the beauty of database interfaces is they're very, very well specified. Well, it turns out AI is very good at things that are very, very well specified. Three, agents don't get tired of monotonous work of translating one specification to another. So it turns out that now all of a sudden database migration, which used to be like the number one thing you would not do in software, is like kind of trivial. Yeah, it's just like, put some money against it, move it. So what changed? Well, what changes is the criteria to be an amazing database company changed. It isn't that we don't need databases or that everyone's going to build their own database or whatever. Like, that isn't what's going to happen. What's going to happen is the criteria changed. So now you're going to have a ton more applications that start, obviously, as we're seeing everywhere. Like, people are going to experiment a lot more because it's much cheaper to experiment. It's much cheaper to start a new application. So now you need databases that scale from like basically zero usage to if it works all the way through. Like, that matters a lot more. Your cost matters a lot more. You want to be able to spin these things up, spin them down, tear them apart over and over again. So the iteration speed goes up in what you need on database. Ultimately, I think the cost becomes the arbiter of this. So the cost and then this like kind of zero to infinity scaling and transportability and everything else around that become like the arbiters of who wins and who doesn't. That's really different than like, hey, I spec'd this database for our user thing and I procured a license and I ran it on this kind of hardware and like everything else. And so there have been elements, of course, of these things over time, but I think that just criteria changed. And I think one of the big messages to these SaaS companies, a few years ago was like, you have a choice. Get to AI or be worth 3 times revenue. And I think a lot of these public SaaS companies are trading at 6 times or whatever. But keep in mind, in 21, they were going for 30 times, right? Like everybody, right? And so you're like 3 times, wow. I've grown 4x since then, right? This is a whole multiple compression is a bitch. I've grown 4x. The multiple has gone down by a factor of 6, so I'm worth less even though I've grown 4x in a few years. And gotten to break even and like all these things. So like that was the first message. But I think that even it became really visceral to me where every single day that you are hitting your plan, you are destroying equity value. Like, think about that. Our whole careers, we learned like you lay out a plan, you execute against it like relentlessly and violently. You hit your plan or you exceed your plan and you keep on building that, and that's how you build equity value. That's what the whole management team's learned. That's what these CEOs learned, like pre-AI. This is like everything learned. And now you're getting in here just like every day you hit that plan, you're fucking up. You're fucking up. You're destroying value. You're destroying value. And the point of like, saying that to them was to set them free. Another articulation of this from my friend Ann Lee Skates was just like the CEOs who were going through this transitory period and had a business that was at hundreds of millions. They thought they're all ready. They were working on their business from 8 a.m. to 5 p.m. and then trying to do AI from 5 to 8 in the evenings. And what they needed to be doing is the inverse. And it's so hard to do that because of all of the training and all of the muscle memory and all the inertia and everything that we learned about. We're all hill climbing in a way. And like, the success model was like set the plan, execute the plan, build value, compound value. And it's like, oh no, stop that. You got to completely invert. And I think there's a very, very long way to get back to your question of like what the profile or what the mentality of the kind of winners are right now. But if we look at, Brendan from Recore or Lynn from Fireworks or Max or Brett, any of these people, they're so nimble about what the eval is. Like what are they optimizing against? They are so nimble on all of it. And if you look at every one of those companies,
I mean, this guy is just yapping right now, right? Like it's fucking common sense shit. Is there anything worthwhile in here? Hopefully when we get past this part.
It's just the business is constantly evolving, and they've done such an excellent job at that. And I think that is very, very different than certainly the way I was like taught.
Well, what's your sense of the disorienting nature of model progress, and like how to? We were talking earlier. Every 4 weeks, like I got a new jagged edge I got to figure out. You're one step removed from that as an investor versus as the technical founder, with your hands on the metal. How are you behaving differently than you would have, 3 years ago or something because of the pace?
Anytime that I'm talking to a founder about a problem in their company or what they're doing or a move they're making or anything else, which is what I spend 80% of my day doing, this is how we used to do it. Mm-hmm. This is what we would typically do. This would be the typical readout on this, this would be the old school readout of why this candidate is better than this candidate. Now, let's reevaluate that in the context of today. Let's reevaluate that in the context of an unstable technology substrate. Let's reevaluate that on, in the context of a business model that's growing this way versus that way. And so I've really started to question every assumption and every lesson that I learned before, which of it translates and which of it doesn't. And so that's a huge difference. I'll give you a really concrete example, which has been very disruptive inside of these scaling AI companies. So these scaling AI companies, we've had a lot of leaders come from the prior generation with great experience and everything else come to these scaling AI companies and completely flame out. And you see it across the industry. And so the question is why? And these are some of the best leaders from 4 or 5 years ago. They had all the lessons, they learned it all. They're excellent, but somehow it's not translating. And there's just some impedance mismatch between the AI founders potentially, the needs of the business, and what these people are bringing. And I saw it really abruptly with a particular sales leader who we hired, who's hey, we can't hit any of these things because the way that software sales has been taught forever is a quota capacity model. Mm-hmm. You have a quota capacity model, each rep does this. In the early days of a company, the quotas are, 1.2, 1.5 million, maybe the ISRs are at 750 or 850, and then over time it scales up and enterprise gets to 2.5 million, and that's the whole thing. That's how it works. That's how all these financial models are built. You start with a quota capacity model, you take a discount on attainment, this is what we can do, boom, boom, boom. Now, fundamentally, without realizing it, everybody was implementing something that was based on pushing demand, not pulling demand. And for so many of these companies, they're operating here, these customers, and there's a new AI-enabled product that comes along, and it's just fucking magic. So these companies are selling magic, magic. Well, it turns out if you're selling magic, and you're the first one there, you're going to sell a lot more than 2 million. And so the whole notion of a quota capacity model and that being working, it's not that it doesn't matter. It matters kind of, but it's definitely not the first order thing or constraint. And so you have these execs come over with this, here's our math, and here's the territory assignments, and here's what we would do, and first you do West Coast, and then you do East Coast, and then you do Central, all of these things, and it's oh wait, no, it doesn't work like that at all. And so one of my big things that I started to realize as I'm interviewing these folks and talking to them is just hey, you need to check everything at the door. Just check it all, which is probably good practice anyway, but check all the baggage. Check everything that you learn, and just learn this from first principles. How's it working? What are really the bottlenecks on delivery? What are the bottlenecks on demand? Because it turns out that in a lot of these companies, you have reps doing 10 or 20, 30 million.
I saw 50 recently.
And so it's okay. Yeah. It turns out that's different.
What is the best salesperson that you've seen that's doing it in a de novo way doing?
Honestly, the best salesperson in any of these companies is a founder, and what they're doing is bridging the jagged edge to what the customer's capability is, and that's it. And it's it sounds so simple, but it's not. But that's what they're doing. And then the market is just so big. Just like we were talking about with cloud, I think the biggest mistake everybody made was the market. They just undersized the market, and it turns out the market's just really, really big, and this market is bigger.
It feels right in this moment in time. Actually, just this morning, you and I are in this great group chat together, where the discussion is the demand for intelligence. I don't know, it seems kind of unlimited, and it seems the smarter the thing gets, the more demand there is, and that maybe the bottleneck is just capital. The world just feels it needs to take a breath. Yeah. The RSI kind of concept, if you apply it across technology, doesn't need to breathe. The agents don't get tired, right. But the world feels kind of oh man, it sure would be nice to have 3 months just to digest this a little bit, and for capital to form and evaluate its prospects, and the scale is getting so big.
That's the main argument the guy from Google was making, right? Eric Schmidt. Saying the real bottleneck to all this stuff, everyone's going on about it's chips, it's energy, it's this, that. He's making an argument that the real bottleneck is the capital, is not enough money. How are they gonna raise enough money to build all this shit? It's getting quite expensive. The build up for a data center now is pretty fucking expensive. I think Chamath was saying it was damn near fucking 40 billion or something.
like this can just keep going, or are we just going to get tapped out of money that can be invested in these things when it seems like we could consume like any amount of money to build any amount of stuff and serve any amount of inference? Like, how do you feel about the market?
I would say this. I am worried about energy. If you think about the models as translating compute into intelligence, like quite simply, what do models do? They very effectively translate compute into intelligence. What's the demand for intelligence? Well, it seems like a lot, right? So then it follows that we will kind of continue to like have more and more demand on compute. I'm saying compute broadly, not chips, not storage, not whatever. But then like, what do we need for compute? We need energy, like a lot of energy. There's all this topic of distillation and Chinese open source and all these things. But the bigger thing to me is that I think China's bringing on 10 times as much energy next year as we are in the US. If energy is what you need for compute and is the bottleneck, and there's unlimited demand for intelligence, then it stands to reason that if we have a lot less energy, then we will have a lot less intelligence, or a lot less tokens, or a lot more expensive tokens. And if we have a lot more expensive tokens, then supply demand, you're going to end up with less. And that seems very bad. And so to me, I think the energy bottleneck, however that is, and it'll manifest in 20 different ways. You know, gas turbines go up and down, natural gas go up and down, and solar, whatever, like all these different things, rare earths, like that to me is probably more concerning. And if I'm thinking about it from a regulatory perspective or government perspective, and I think the administration is doing some things around this, like, you know, fostering really investment and development of all energy. And I mean all, like solar, nuclear, gas, like whatever, do it all. Yeah. Like we should do it all. Yeah. And it'll work itself out, you know. But again, this is one of these things where yes, one will be relatively better than the other, and I don't know, and I'm not smart enough to predict which one's which, but like it'll all work.
Speaking of compute, I would love to hear the Cerebras story. I haven't heard you tell the full version of this. I think the reason I'm asking about it is I'm deeply interested in compute. I have big investments in compute. And I'm fascinated by it. It's just like the most magical thing to watch happen. It's mind-boggling when you get close to one of these things, what humans have been able to do on these chips and in these systems. I think you invested in 2016 or thereabouts. So I think it was your first foray into like extremely difficult hardware type investment.
Shit's so hard.
And I'd love it. Now the world is full of opportunities like this, whereas back then it was like a really a one-off. Teach me everything you've learned about hardware investing through Cerebras.
Mostly, it's really hard. It's an amazing example to me about like the naivete required. So. You know,
but it's not naive. All they did was just fucking use like a bigger chip, right? They're just using more area. Yeah, not that difficult. Not some like, you know, mind blowing discovery. But you know, on the thing about energy is like, Again, it's so hard to think about the future right now, right? In any regard. Because like there can be so many advances in regards to energy. Like there could be like start using like fusion or any form of fission. But not only that, but there's also like the aspect of like algorithmic improvement, right? Like suppose like there's some new model structure for like architecture comes out that uses, I don't know, it just throws some like ridiculous order of magnitude, like fucking 100,000 times less energy than currently needed. Then definitely the bottleneck is not as big. Or even like if photonics start to become used more.
In 2016, it was 5 founders in a deck. I really did not want to go to the pitch, but it's my job. Because I'm like, why are we going to go to hardware investment? Like, it's crazy. It's been 10 years since we made a semi-investment. I think basically the team was excellent. And then the kind of first slide was just like, GPUs actually suck for deep learning. They just happen to be 100 times better than CPUs. And as soon as he said it, yeah, you have to remember, this is pre-Transformer. Like, OpenAI is this like weird research lab at this time. Like, NVIDIA was worth like 40 billion, not 4 trillion. The TPU hadn't been announced, like none of that. So this is like early. But the whole idea, just like, as soon as he said it, I was like, oh shit, of course, like why? And I had spent the last 18 months trying to figure out like applications of deep learning and looking at the security thing, looking at this medical imaging thing and like all this other stuff, thinking like, hey, there must be something here that's gonna be really transformed by this stuff. And so anyways, we go through this like whole journey, we end up investing, which was amazing. We first met on Wednesday, partner meeting on Monday, had a bunch of meetings in between, and it was like, just built a lot of conviction that this was a great swing. And I'll tell you what I understood, and I really just understood so little, but basically there are 3 things that we know how to do to speed up deep learning in hardware, still till this day. Increase the number of cores, increase the communication between cores, bring the memory closer to the compute. Those are the 3 things. That's it. Those are the only 3 dimensions we know in hardware. So my articulation of what they said to me, and like honestly all I understood was, let's just take all 3 of those things to their logical maximum. You have a wafer scale chip. At that time, you would have 450,000 cores on it. You'd have something like 20 gig of SRAM on the chip, so you never have to go off chip to get the memory. And because they were all in the same wafer, the communication between cores is maximized. So this is the best you could do on that process. And I think the first chip was 7 nanometer or something. And so like you're like, okay, like that's it. Like that's what we do. And it turns out that in software, if you have like that kind of like logical block diagram of like why it works and everything else, you're kind of 80% of the way there. And it's a matter of like go-to-market execution. In hardware, you're like 2% of the way there. Like there's things like physics and you know, and this entire
The other
supply chain
thing,
of
right?
vendors and-
That is the other aspect. Like we were talking about this the other day, but like, okay, when the Astra model did like those 10 mathematical proofs, right? If you watch like the Moonshots podcast, like the AWG guy and what's the other dude's name? One of the guests. But like they're both like deep in research, right? And they didn't like outright announce it, but it seems like the same thing is about to be happening in physics pretty soon here. Or there's about to be some like pretty remarkable advances in physics coming here via AI. And not only that, but in terms of what this guy's talking about, the hardware, like, AI is going to rapidly change this too, right? Because it's starting to like develop its own like blueprints for the chips. It's starting to like rewrite kernels for the chip specifically, etc. On top of like generating code in like straight binary. But there is no like pass through from like whatever like language, higher level language you're writing down to the binary, just straight up binary off the rip.
that like, you know, like there's of course TSMC, which everyone knows, but it's not just TSMC. There's 30 other vendors that like matter in like putting all this stuff together and everything else. And so like I didn't know any of that.
Know what I'm saying?
So, you know, fast forward from 2016 to like 2019, I think they got their first parts back, and it's like you go through this like bring up, and then it's like bring up, oh yes, we got a part back, and then it's like bring up, yeah, and then you got to go through like wait, bring up, and there's like 14 steps of bring up and everything else, and then by like 2020 we had our like first thing that like works, and then you're like, then it's just this march of like actually getting it to work. And you know, one of the lessons that I've learned on this stuff is basically you go through all these sims and everything else in hardware and semis in particular, and that basically is your roofline. Like that's the maximal performance, best it's ever going to be is like what that is. And then every bit of like software and reality and compilers and kernels takes away from that roofline. You might start at 10% of the roofline. Once you bring it up, and then you're like, you know, then these guys are grinding for months and years to like get closer and closer and closer to the roofline. It's really different. It's really hard. I'm actually like astonishingly bullish. If I kind of rewind, part of the reason we made the investment was if you looked at the 4 prior generations of compute that like in my lifetime, so you had CPUs, you had graphics, networking, and mobile. There was a new workload each time. So you had multi-purpose compute and led to the CPU. You had massive parallelism, which led to the graphics processor. Graphics processor offered massive parallelism, which led to graphics. Then with networking, you needed really low latency chips, and so they had low latency chips. And then with mobile, you needed really power efficient chips. And so each case, we ended up with a new $100 billion company. And the first question, going back to 2016, was like, is AI that big a new workload? Because there have been many, many other attempts for specialized chips for other things that like really just didn't end up mattering. Like there's some fine outcomes, but like just didn't really end up mattering. Right, exactly. And so it's just like, well, okay, you need something that's like a really, really big workload. Okay, so that's one. So and we had a lot of conviction on that. And then 2 was the nature of the workload. Did it introduce a new constraint or problem in it? What I learned was like basically the AI workload benefited from the parallelism of GPUs massively. But GPUs didn't solve the core-to-core communication, basically the layers of the network problem. And so like you're like, okay, wait a minute. Like there is a new constraint, which is communication bound problem. And so then you're like, okay, is AI a new giant workload that is going to have specialized chips? Basically everything that I just said was everything I knew at that time. And I do actually think so that's obviously played out. And like in each prior generation, we got Intel, we got NVIDIA, we got Broadcom Avago, we got Qualcomm and ARM, like, in each of these generations. And like there will be like these giant winners, standalone winners. Obviously the TPU itself is a winner, Trainium's a winner. You've had Groq and Cerebras, Etch, like it'll keep getting fought out. Yeah. But I think that will end up being big. And actually I think there's a new 6th one that's coming, generation, which is, and I'm really excited we've made an investment that's unannounced in this, but I think that for the first time in a long time, there's actually room for a new CPU approach. The thing that's happening right now, and you see this reflected in all the semi-stocks and everything else, is the LLMs, which are running on accelerators and GPUs, generate code. The code runs on CPUs. And right now it's running on classic CPUs we've had around forever. But there's a whole bunch of constraints on CPUs that have existed, and CPUs have dragged all this baggage forward that you might not need to anymore. And so I'm actually like really excited about that possibility.
The next category. Does the experience with Cerebras make you want to do a lot more investing in companies?
Fuck no.
But why not? Like the defining.
Because in 2019, we're sitting in a board meeting, and this thing is melting. It's like fucking melting. Okay, and we've raised $500 million or something. And it's like, wait, what? Like what? It's melting or it's burning or something. And like we're looking, and I'm like, holy shit. Like and I realize like $500 million isn't that much in today's era, but like I was just like, we're gonna lose all this money. Like it's just not gonna work. And and I'm talking to Andrew about this, obviously, just what that team did. Insane, like insane in terms of the technical.
Hardware teams are built differently.
They're built differently. They're built so differently, and I have so much respect and thanks to them for what they've done. Look, joking aside, I think that there are efforts that make you really proud to be a venture capitalist, and like because you're funding something that like makes a difference and matters. And for me, I'm an investor because like that's a means to work with companies, not because I like fundamentally like love investing or something like that. I like the working with companies. That's my favorite part of it. And working with teams like that and companies like that is so special on these like giant ambitious efforts. And and I said this before, like well before 2018 or whatever. It was like whether Cerebras worked or didn't, I think it was an effort that was worth venture capital. Like that's the kind of thing you should do. You should try to build something that people have tried for 50 years and have been unable to, but now we think we could do, and there's a reason and application for it and everything else. I love that. Yeah. And so I do like those kinds of things, joking aside. And we do have a robotics company. We actually have a defense company that I'm also really excited about. And then this like CPU project that we're talking about. And so like I think these kinds of things are actually really fun and interesting and good use of venture capital, but they definitely aren't easy.
I love the sort of productive naivete that you described, where it's probably a virtue that you didn't know more than you knew, otherwise you wouldn't have done it.
Yeah.
This is certainly my experience with Etch, that like when we first called around asking, like if you asked experts, everyone says,
what are they
"Hey, any of these
doing?"
fields?" You ask experts, they're gonna tell you don't do it.
Yeah.
Like it sucks, it's too hard, base rate's too low, young people can't do it, there's 47
all those
reasons.
things, yeah.
Is there anywhere where that is just a bridge too far? That could be like, I'm thinking like bio or something like this, where you just are unwilling to invest if you're naive.
Actually, like most of the time, all of these like stereotypical statements are correct. Like they're not like correct like 3 times out of 4. They're correct like 19 times out of 20, maybe 99 times out of 100. The thing that Bruce, one of our founders, always says is just like, what could go right? That we have to ask ourselves is like, what could go right? And do we see that path? And it's like, yeah, young people can't build chips, or you shouldn't do no semi company, or you shouldn't do this, or like whatever. Like all of that stuff is actually totally right, except when it isn't. And so apparently there's a saying that someone said to one of my partners, which was, if it doesn't work, it'll be for all of the reasons that your partner said. If it does work, it will be because those reasons didn't matter.
Vanta automates security and compliance for over 16,000 fast-moving companies like Ramp, Cursor, and
Etch is a San Jose-based artificial intelligence hardware startup founded in 2022 that designed specialized application-specific integrated circuits aimed at accelerating AI inference. Makes sense. The hardcore the transformer architecture directly into its silicon. The company's chips run large language models with significantly higher speed and efficiency than general purpose GPUs. Sure. I'm very curious to see how this world of like chip development develops from here, right? Like, it's just like a flash in the pan, and eventually just we come up with like a much superior method to any of this, and all these companies just end up being useless down the road.
Harvey, keeping them audit ready around the clock. It's the #1 agentic trust platform, and it now helps companies like yours watch for the risks that show up between. Ridgeline is built on exactly that foundation, which is why I believe that firms that come out ahead in the AI era will be the ones running on Ridgeline's unified platform. If you're serious about your firm's AI strategy, Ridgeline should be part of that conversation. You can request a demo at ridgeline.ai.
You and I think are both interested in robotics.
Yes.
It's not controversial that if robotics works, it might dwarf what we're currently living through. What do you think has to be true for it to work? Like, obviously it's exciting. I want a robot in my house folding my laundry. It sounds great, but it's kind of one of these classics. It's always 10 years away, and it's been that way for a long time. What do you see happening? What has to happen for this to actually be a thing in the near to medium term?
We've had classic robotics forever, and they're all over the place, and they're on assembly lines and manufacturing lines and all those things. It's where you're doing repetitive tasks in controlled environments. Repetitive tasks in controlled environments is like more or less solved, and like that'll continue to happen. But having tweaked tasks in real world environments, that's where you need the AI. Like that's where you need the AI plus the robots. And the trick with it all is you need a model that can do that. And of course, the first problem is there is no internet scale data to bootstrap the whole thing, right? LLMs are all bootstrapped on the internet, which is a ton of human knowledge. And the equivalent for that for robots doesn't exist. And people are trying different things with videos and simulations and teleoperation. So like there's a lot of different ways. But if you kind of think about, take teleop as an example, like how much you need to teleop robots to get to an internet scale data. This first step is like getting a good set of data to bootstrap the model. And one of the, I think, insights that you can have is with the internet, there's like a lot of slop data. Like even before AI generated all this stuff, there was also a bunch of junk data, and some data was more valuable than others. Like you may value, okay, certain things on Reddit more valuable than other things. You might value Wikipedia more than like other forums. You might value GitHub more than other things. And all of the model companies did that, right? They prioritized data that was more valuable and less valuable, and ran that through the model. So I think one of the most interesting things that these AI robotics companies are doing are saying, okay, well, let's just go after the high value data to start. And if we go after the high value data, then we can kind of bootstrap this model. Now, once you do that, then can you, through that pre-training process, get to a place where you can have very small auxiliary examples of data that you add in post-training, and all of a sudden it works for that. That's the magic we have with LLMs, is you have this giant pre-trained base, and then you add a little magic on it in RL and post-training, and you teach it. You teach it a new thing that it wasn't in the pre-training set, and you kind of go from there. And I think the exact same thing is happening in robotics. We're investors in Sunday Robotics, which is going after this exact pipeline. It's a cool company, and they're doing household robots. But the key part before you get to household and all that stuff matters much less actually than like, can you get this like training pipeline to work, and how do you do that? And one of the lessons I learned, and I look back, I try to learn from history because it doesn't repeat but it rhymes. And if I look at autonomous vehicles as an example, which is they're robots basically, they're AI plus robots. You look at Waymo and you look at Tesla, and they were both designed vertically integrated in their own way. You have a Tesla, you have a fleet of Teslas that everybody owned. It was collecting data on the Teslas, and it was used to train the models to drive the Teslas. And same thing with Waymo. And I think part of the lessons is they gathered very, very high quality data. They did their pre-training, and then they worked off of that. And that was a simplification to allow you to get to a complete product or a complete solution, which of course is going to continue to improve and ultimately will generalize, I'm sure. It'll generalize in some way, so you'll be able to strap it on any car and everything else. So I think the same thing, exact thing is happening in robotics, where you have companies like Sunday and others who are using techniques where they're vertically integrating the robot and the model, the data collection around the robot. Sunday uses gloves that are designed just with the robot hands, so they're perfect. So you get very good data transferability from one to another. You do this pre-training, and you have a great pre-training data set, you have a good model, and then you start adding these examples and you RL and post-train on top, and you get cool emergent behavior.
Do you have a most visceral moment?
When we invested in Sunday the first time, we saw them, my partner Peter.
I mean, I just looked this company up. This robot looks pretty sketch. The hand technology does not seem, personally, their company as I've seen looks pretty suspicious.
A demo, we went down into the basement at Stanford Lab, and they had like this totally janky cardboard glove thing, and you see a few evolutions of it. And the last time we saw a demo, we like went down in the basement of their now office building, and there was like a dozen robots just folding arbitrary laundry. It wasn't a demo. It was just trial and error, and then they have people like taking the clothes and then measuring them to make sure that they were folded properly, and they were like creating a rigorous baseline and evaluation criteria. And I was like, oh my God, this is happening.
Do you ever worry about how to pick the right customer for these companies? Like every one of these things folds laundry, which I don't think anyone likes folding laundry. So it seems like a good use case, but it feels like we don't actually understand the demand for what these things will be used to do. Do you ever worry about that? They were sort of building solutions that will then be in searches of problems?
I don't, and I'll explain why. And it's like certainly informed by watching the LLM evolution, which is like, I think some of the people who were involved in the early LLM at OpenAI like really understood that like code was going to be important, and obviously the Anthropic team had this perspective that you could get to RSI if you got code generation going and automating AI research and whatnot. But if you think about it, like the first use cases were very much language oriented. They were very much like essay writing and editing and like marketing. Like I think the first application that really took off was Jasper, which was just like writing marketing copy. And I think it's going to evolve a lot. Basically, I think like laundry is kind of a good task because it's arbitrary, it's complex, it requires dexterous manipulation, and it's done on. It isn't time sensitive, so you can like if it takes 3 times longer, so be it. Who cares? It doesn't matter. Just let it run all day. So I think it has like some of those properties, but I don't think the task is actually that important. What I think is much more important is, are you pre-training an amazing model and then being able to post-train on top of it and get that flywheel going. If you get that flywheel going, then the task capability will just keep multiplying.
Maybe this question will be annoying or slightly uncomfortable for you, but if you ask basically every founder and critically other investors of your type, almost everyone, if I ask like who's the best board partner, will say you. Like you come up way more often than anyone else that I've come across. And I'm curious why you think that is. Like what it is that you're doing that other people, the incentives are there, like to do a great job as a board partner. What do you think you're doing on the boards of these companies, partner with the founders, that's actually different from other really talented investors who are also nominally doing the same job but don't come up nearly as often when asked that question?
One of the things that I've realized is we each are attracted to like different types of entrepreneurs and like where we have chemistry. And I think one of the differences when I say I'm an investor second and I try to be a partner first. And here's what I mean. We'll see companies come in. We had one come in yesterday, and it's in what I would call an investment grade opportunity. It's kind of like you can invest, it probably works, you make money, it's good. And an investor would do that. And a partner wouldn't, because that's not sufficient for a partner. Because like unless you have real chemistry with that person where you feel like you're gonna be able to work together really effectively, and I'm gonna learn a ton from them and they're gonna learn something from me, and together we're gonna just like feed each other's loops, right? Unless you feel that way, then like you can't be a partner. And so you pass on that. But like that's a really important like fit element to me. And so it kind of starts with this like mutual selection, actually weirdly, of like they want to partner with us and I want to partner with them, and like I'm really like looking forward to working with them together. And I'll give you a really good example of where this like kind of comes into play for me. If I take like Saji and Benchling is life sciences SaaS company's absolutely crushed, done really, really well. And then of course, you have this like biotech crash, and the company it became hard, like it became grindy, and the company had never had any churn for the longest time, such that even on their like reports, for every SaaS company you have this like, okay, gross ARR added, churn line, net ARR added, like everybody does the same thing. They never had a churn line, never reported it for the first of like 6 years that I worked at the company. So then they got 7 years of churn in like 12 months. Turns out like life sucks when you get 7 years of churn in 12 months. And like through that grind and through it all, and related to the whole like, wait a minute, the goalpost moved, we have to do something different, everything else, they kept like thinking about how to apply AI for these biotech and pharma customers, which they're very close to. How can we make it better for them? How can we apply these models in their world in a way that they're excited about, and continue to iterate, and it was grindy. And I was there for it. And I just like, and that's one of these cases where it's like you're excited to work with that person, because like one, of course you think it's a really special opportunity and there's a way out, there's a path and we can find it. But two, because of the joy of the game and like the relationship and like everything else, like that's part of it. And I don't know what it is more than that. It's very different. I've seen different models and lots of different models of venture capital work, right? Like Moritz was a writer, Dor was a sales guy, like, Gurley was an engineer, like Peter's a career venture capitalist, like they're all different, right? But for me, I think like that, working with them, it's like when I call these people, I learn something and they push back on me, and then I ask them questions. And what I've realized is like so much of my job is they know the answer. They know what they want to do, they know the answer, and it's maybe asking questions of them to maybe help solidify their conviction or solidify their articulation of what they want to do and why. And through that process, hopefully we get like, 1% better a few times a year. We make a 1% better decision, 2% better decision a few times a year. And if you do that over a decade, that compounds to real results. One of the questions that I ask myself before making an investment is, there are all these people that I care about through my life, like you care yours. Could I talk one of them into going to this company and intellectually honestly to myself, explain to them why this could be their life's work? And if I can't do that, I should not invest, because it's just not, like, it just means that the project is not, for me, it just
Interesting.
doesn't line up in that,
It's an interesting
way.
approach.
So as long as we have one of those things, it doesn't matter that much what it is to me. It's important. It could make a big dent. And if it can make a big dent and it's a special person, I'd love to work on it.
Are there any other questions like that you ask yourself before investing? That's a particularly good one.
Yes. The other question, if this person calls me at 9 p.m. on a Saturday night, will I pick up the phone?
I call that the green button test.
Yeah, right. It's just like it's one of these things which is like, if you don't, then
just know if it's yes or no,
you just know, like, for whatever reason, it's a chemistry thing, and they have to feel the same way, obviously. And then one of the other ones is like, if it's right, does it matter? Which is different than this like first one, but it's like, there's so many things that we could be right on as a business. I looked at one last week, and I told entrepreneurs, I was like, I really think that you can build an amazing company here, and you just shouldn't raise venture capital. But there's like so many things that you can be right on but they ultimately just don't matter. Like, nobody cares. That's a better way to say it. If we're right, will anybody care?
Yeah.
And it's like, if they won't care, then you're just not going to build enough equity value. And I think that's another useful one.
One of the coolest things that's happening right now is all of that you just described has higher stakes and more leverage attached to it,
Yes.
which is manifested most simply in more dollars.
Yes.
And higher prices. You and I have talked about this notion of what high multiple, meaning like high multiple on invested capital investing is like, and what it has been like and what it's moving into.
Yes.
You did something recently, which was you raised a growth fund for the first time in a long time. And I think that is related to this concept of like, these companies need more capital, the prices are higher, the outcomes are bigger. Maybe we can earn the same multiple on $1 billion entry price that we could on a $50 million entry price, 10 years ago or whatever. Can you talk through that evolution, talk through the partnerships, like way of thinking about it and talking about it, like what you believe to be true that results in this decision to do this?
Just go back to like, why did LPs, starting with Swenson and everyone else, like, why did they start investing in venture capital? And fundamentally, it wasn't because they thought they could beat the NASDAQ or the index by like 3 percentage points a year, or 5 or whatever. It's because there were situations where venture capital could drive these insane multiples on invested capital. Like, that's from a financial perspective, that's what they're seeking. And for the longest time, for most of the industry's history, two things were synonymous: early stage investing and high cash on cash multiples. Like, the way to get high cash on cash multiples was to do early stage. And like, that's it. Like, those two circles in the Venn diagram like almost perfectly overlap. And I think the thing that's changed is relatively recently, in the last few years, because outcomes have gotten so much bigger and these markets are bigger and everything else, the circle of high cash on cash multiple opportunities is bigger than just early stage. And it's not so big that like there's like a gazillion new companies in there that you can generate 100x's on. That's not true. But there are certainly many outside of early stage where you can generate really high returns. And so that's it. Like, that's what we want to go after. You could argue we're a few years late. I think I take that criticism. I think that, but I think that opportunity exists on a go-forward basis. And so, like, we should go do it. And everything else that we represent, which is the high conviction.
Well, there's like a pretty interesting presentation on this. I think it was at the All In Summit. Or no, it was from the liquidity event. Basically, the guy was saying that like, he was doing the math on companies going from like $10 million valuation to like 100 million, like $1 billion to 10 billion. And like the higher it got in valuation, the higher the probability of reaching the next milestone. So like this is kind of like a way of approaching venture where like, sure, maybe you're not like the initial round of the company or like the very first investors, but like you're still getting pretty high returns with much lower risk, higher probability of being correct.
Partnership, everything else like that has to still be there.
As part of that discussion, what were like the other sides of the debate, such as like, maybe we would have said the same thing in 99 and 2020. As markets get exciting, it seemed like the possibilities, we all do this extrapolation.
God, I'm hungry. Hungry as fuck.
Despite all that, still not.
Yeah, I mean, there's all the counter arguments that you would expect. I think the biggest counter argument that really made this time right versus 2 years ago or whatever was you need the team that can do it. Like, it's just a different mentality. Like, there are differences in how you evaluate and think about things. All the other stuff, or there's why not change and stay within your circle of competency, and all those things are true. But to me, that was like the biggest one. And we had several examples over the last couple of years where we had, I think, the right intuition on a company or an opportunity, and we didn't do it
Because it was outside the
because it was outside the box. And that's obviously dumb. And I think it is quite different than a lot of the industry does. We are really chasing these like very rare special companies that have like very high cash on cash opportunities where we think there just can be runaway successes and we can invest in them.
Is there any lesson to be pulled from the many, let's call it 20 to 100 X's that you personally have observed? I mean, it's like such a crazy amount of return that like obviously it doesn't pencil in the beginning. Like you can't make something pencil if it was that clear, like the price would be different.
You can't.
What have the 20 to 100 X's taught you in aggregate, if anything?
Work with really special people. It's kind of like you want to work really hard, you want to work smart, and get lucky. Like it really all has to come together. And there's a lot of things that are like timing dependent, that you have no control over as a company. Like take this Rubik's example is a good one, which is like we took it public this time in May, but like we tried to take it public in 2024, and it would have been taken public at a much much lower valuation, and like it would have been rough, and it didn't work out because of CFIUS and all this stuff. So timing matters. Like and just the advancement of that 18 months like made all the difference in the world for a bunch of things that were honestly outside of our control. There were some things that were in our control, like getting inference running and everything else, but like there's a lot of stuff that was outside of our control. These are all the classic things, which is like you got to focus on what you can control. That's one of the things that's really different than software companies. With software companies, aside from like building on AWS or whatever, you pretty much own your whole stack, and so you're really fully in control of your destiny in that way. With hardware companies, you don't. Like there's an entire supply chain and all this other stuff. HBM's a thing, and DRAM's a thing, and TSMC's a thing, and a lot of those cross geopolitical borders, and so geopolitics gets involved, and so then that makes that complicated. And so that's a really big difference. You got to get lucky on the timing and macro and other stuff. But I think it really starts with like working with these like crazy people with unbounded opportunities. And if you work with these crazy special people on unbounded opportunities, then you get lucky from time to time. You're bound to. When I was 20 years old, I was working at an investment bank. Ben Horowitz, Mark Ment, had started LabCloud, was still in stealth, and Ben gave me an offer to be his assistant. And I was talking to this associate who like seemed like this like elder at the time, was probably 25, but like I was talking to this associate at the time, and he said this thing to me which really stuck with me. He was like, "Do you golf?" And it was like classic banking question: "Do you golf?" I was like, "No, I don't fucking golf." But he's like, with golf, you keep on practicing and you like keep getting the ball in a 3-bar like close to the pin, close to the pin, close to the pin, close to the pin. And he's like, you keep getting the ball close to the pin and you keep practicing. And he's like, that's hard work. That's like working smart. That's what you want to keep doing. He's like, getting the hole in one, that's luck. I kind of love that framing, and I use it with my kids actually, because what it says is like, yeah, there's luck involved, and there really is luck involved. But there is actually a way to increase your luck. And the way to increase your luck is get a lot of balls close to the pin, and then like, yeah, eventually one will drop. And so I like that mental model. So I kind of go back to this for companies, which is, I think each of us invests in 1 to 2 companies a year. I think in my 12 years, I've invested in 18 companies total.
Crazy.
Which is a relatively small number. So it's a very high conviction and very high commitment. I have a lot of skin in the game. I believe in these entrepreneurs. I believe in these companies. But if you keep on working with these like very special people and these opportunities, magic can happen.
What have you learned about the best reasons and conditions for going public?
Benchmark does these Monday night dinners. You've been once, and so we had a CEO last night of a multi-$100 billion private company, and we had this whole conversation. It's a little like fresh. I think that ultimately, when you go public, you have a range of new opportunities in what you can do. You have public trust, actually, weirdly, because there's some transparency that comes with being a public company. You obviously have a currency that you can do things with that ends up being there. You have an unbelievable ability to raise capital, which I think is why the labs will ultimately go. Although I think the trust thing is actually a really important element of why they should go, and it's beneficial to the world and to America if they do go public. It's like,
see what's going on.
Yeah, see what's going on. Everyone can see it, and I think that's like a really beneficial setup. There's another element of it, which is what does a collegiate athlete want to do? Go pro. They want to play at a higher level. And is it harder? Yeah, it's harder. Is the competition tougher? Yeah, the competition's tougher. They move faster, they're tougher, they're bigger, they're stronger. The stakes are bigger, the stage is bigger, the scrutiny is bigger. All of that's true. it's kind of the same thing with companies. There are a handful, and it really is a handful, 3, 4, whatever, that can get to this like tremendous scale without going public because things have gone through their execution and excellence.
Lots of free cash flow.
They've lots of free cash flow and they've done really well over a really long time, and I think that's fantastic. And good for them. But in general, for everyone else, like, get out there. And then the other thing that I would tell you is there are windows for a particular type of company. So like, yes, the SaaS companies that went public in 2021, a whole boat of them have struggled and it's been tough in the public markets because their stocks ripped to this multiple compression issue. They were trading at 30 times, they 4x'd in size, but now they're trading at 6 times. It turns out you're under still, right? Like that's a tough place to be. Yet I will also tell you that there's 500 something probably SaaS companies that are between 100 million and 500 million that are private. What happens to them? Those employees never got a chance to sell. Those employees don't have annual tenders. Those employees don't have an opportunity to exit. Like those investors don't have an opportunity to exit. They're stuck. And I don't think they're all going away. And as I said, I don't think they're all getting vibe coded and everything else. But ultimately, the AI natives with their growth rate sucked all the oxygen out of the room and all the interest, and the window was missed. And that's tough.
What are the biggest debates right now inside of the partnership? I always love coming here and talking to you guys when there's something interesting going on because you debate. It's healthy. It's can be really fun to watch, and I learn a lot from it. What are those debates today?
There's a ton of debate around in this AI infra apps, foundational models, infra apps like ecosystem. Where does value accrue, and how does it accrue? Where are the moats, and how do we think about that? But also like the business model innovation. I think one of the things that people don't understand about like why SaaS did so well versus traditional software was it wasn't just that it was a better delivery model and everything else. There was actual business model innovation on it, right? Like you really did have this like subscription element that ended up being fantastic for both the company and the customers. Like it was a win-win situation. And so I think there's like that same thing actually exists in AI and selling by outcome and that piece of it. But then wrapped up into that debate and discussion is like how much value just accrues to the labs. How much of the value just accrues to the semis? I mean, that's a real discussion.
What do you think?
Like I am of the view that it all works. As I said, and I really like. It's a very weird thing. It's like, will the CSPs do well?
Yes.
Yes. Will some of these neoclouds do well? Yes. Will the Fireworkses of the world do well? Yes. Will NVIDIA do well? Yes. Will these like chip startups do well, or some set of them? Yes. Like, are we going to have edge inference on our phones? Yes. Are we going to have like near edge inference on POPs? Yes. Are we going to have big models in data centers? Yes. There's so much zero sum thinking, which is just like, okay, how do we cut up this pie? And they're going to eat this much, and like, oh no, Anthropic or whomever is going to eat 98% of the value, and they're going to do all the drug discovery. And I was like, come on, like no, that's not what's going to happen. Like, and we have patterns like in the not that distant past where it's like this exactly manifested, right? When I say like I think everything's going to work, and I listed off all these other things, it's really important to understand that. That doesn't mean that every company that's doing every one of those things is going to work. It actually means quite the opposite of that. Like most companies in each of those areas are not going to work, and it's actually more important than ever to have real differentiation and to like really like take each of these thoughts to their logical extreme and understand like, wait a minute, you got to go all the way on these things and really differentiate on it.
Is there anything else you have your eye on, whether it's in the funding market, in the technology world, like anything at all that you really are watching carefully?
It's actually funny to me that some of the people are so smart, and yet they're in this like tech world where they're like kind of reaching these like deterministic almost conclusions, of like mass unemployment and like all of these different things. And I'm going to give you a really concrete example, which I think is just so good. Take Jeff Hinton in radiology. So I think it was 2016 where he was like, we should stop training radiologists. Like AI is going to do it all better. And like, look, Jeff Hinton's like 3 orders of magnitude smarter than I am, but like could not have been more wrong. But the actual thing that led him to make that statement or that conclusion was 100% correct, which is, if you look at these radiology images, like we should be able to train AI to do a better job of like reading these things than humans, and that's probably true. And actually, I think the studies and areas have shown that to be true. And we have an investment in a company called New Lantern, which is approaching this. But the big hurdle and the big thing that it articulated was like, wait a minute. First off, all of the aggregated training data set doesn't exist anywhere. And so like what you see is like companies going after like chest CTs or like very specific elements, but your typical radiologist looks at a whole variety of things every single day, from x-rays to CTs to MRIs of all parts of the body and everything else. And so an AI climbing in specific areas like chest CTs is like very marginally helpful because it's only doing that one thing, which could be one of 20 things or 40 scans that they read that day. And so, okay, so problem number one, you don't have the data, just like we talked about in robotics and everything else to train the AI. Problem number two, the whole healthcare industry is oriented around reimbursing doctors for making readouts. And so like, how is that gonna work? And like and there's liability associated with that. And there's repercussions of getting something wrong or missing something. And there's medical malpractice and everything else. So like, how are we gonna avoid that? And how are we gonna get around that? So that's like problem number two, just like real world stickiness. And so I think in the end, we're going to end up with this application where AI really does help radiologists. It helps radiologists get more and more higher throughput because the AI can do some parts and the radiologist does some parts and they're checking each other and everything else. And you do kind of weirdly end up in this co-pilot situation for some time. And then you're going to slowly have the AI read more and more of the scans and build up and build up and build up. But the actual duration to get from here to there is going to take a long time. And in the ensuing time, We need more radiologists, not less, because, oh, by the way, everyone's getting more imaging than they used to get because the cost of imaging is going down in the Javon's paradox kind of way. And so, like, my point on it is like you have someone very, very smart who really understands the capabilities, really understands what's happening, has the right data, but by not thinking of that data in the real world application comes to the wrong conclusion. And that's how I think of the unemployment thing. I think it's almost the exact same setup.
Eric, I love talking about market
So fun
with you. An absolute blast.
Thank you.
You know how small advantages compound over time? That's true in investing and just as true in how you run your company. Your spending system is your capital allocation strategy. Ramp makes it smarter by default.
Interesting
Better
video.
Decisions, better economics over time. See how at ramp.
Bum, 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 bum. Yeah, I like the way of kind of thinking about the investment, right? So that's quite an interesting way to like quote it. And you got food though. Boy, I'm hungry. Hungry as fuck. Hungry as fuck.
Marcos, Dre, tap, let me feel, tap, set the limit, walk away, we came down and tapped, had to laugh that day, 618 the entry value area low, quick tap, perfect, now we watching this thing go, POC, the magnet, pulled it right to me, let me sit in there all week, filled it perfectly, quick tap, limit, the math, wake tap, limit says we came down, kept it clean, didn't make a sound, feel perfect, man, don't miss, wake tap. Limit, feel, got him. Marcos. Marcos.
Marcos trades, bullish divergence. Watch the look. Watch this strength. Lower low, higher strength. Lower low, higher strength. Bullish divergence. Watch it turn. Price make low, then they dip one more. Crowd gets scared, they sell the floor. Momentum rise while the chart look weak. That is the signal underneath. RSI creeping, sellers get tired. Tip still dark, but the beats catch fire. The thing break down, I see a trap, one clean wick. And the price snap back, value area low with the pressure type POC. Pulling through the red skin light. Everybody short when the move gets in. I stay cold and I wait to step in. Bullish divergence under the zone. Bullish divergence. Rise comes on. Lower low. Strength rise. Dark chart. Right side. Lower low. Higher strength. Lower low. Higher strength.
price too low.
Straight beneath,
One more whip,
one more sign,
then we ride.
then we climb.
Build it slow,
Let me breathe.
price too low.
Straight beneath,
One more whip,
one more sign,
then we ride.
then we climb. Lower low, higher strength. Lower low, higher strength. Lower low, bullish divergence, bullish divergence. Lower low, higher strength. Bullish divergence, bullish divergence. Watch it turn, watch it turn, watch it turn. Value low, DOC, price snap back, energy. Bullish divergence all night. Dark chart, green light. Late night screens, bass in the street. Cowbell sharp with the 808 heat. Price look dead, but the data spoke. One clean bounce in the floor, oh whoa. They sold the bottom, that was their mistake. I waited calm for the rhythm to break. Momentum told me the selling was weak. Now the chart got lift and the move got sleek. No rush on the entry, no fear in the red, just patience, pressure, time and speed. When the low gets swept and the strength survive. Bullish, bullish, brings it back alive. Lower low, high strength. Lower low, high strength. Bullish divergence, bullish divergence. Watch it turn, watch it turn, watch it turn. Price react, base attack, clean reversal, run it back. Bullish divergence all night. Dark chart, green light. Marcos rates, bullish divergence, clean reversal. No chasing.
Just confirmation.
Marcos trades, always prepared. The market open, the market open. The market open, the market open, the market open, the market open. Market open, market open, market open. Market open. Surgical logic, I'm in the zone. 618, the level is hit. Institutional flow, yeah, you're feeling it, High off the profit, high off the trade. Exactly where I land. Market open, market open. Market open, market open. Stay alive, market open, stay alive. Worldwide trading. Market open, market open. Marcos trade. Always prepared. Too easy. Market open.
Walk, up at the mile, is the mile. Get him! The mile is the mile. Walk, up at the mile, is the mile. Up at the mile, is the mile. Get him! Got him. Wake up in a deep penthouse, sun high in the sky. Blowing on these as I watching candles fly high. Retail real traders panicking, them looking for a sign. But me already entered, me just chilling on the line. Value area higher, we break it with a grin. While them longing at the top, that's a digital sin. Me barely even looking, just a glance at the screen. Up performing Wall Street, if you know what me mean. Me eyes a bit red, but the vision is clear. You see the liquidity, me don't feel it fear. 618 top, yes, pixel perfect. Tell the haters move, them budget is worthless. The math is the math, yeah, the math is the math. Me riding the wave, clearing all the path. High energy living, elite level play. Me print more money in an hour than your day. Easy money, baby, we don't even sweat. Funding the Bugatti with your biggest regret. The math is the math, and we move like a boss. Island rhythm while we feeding them the love. You got 786, watch it bounce, watch it kick. Me executing orders while me lighting up the stick. Me have the exotic fleet, Matt Black, yeah, them sleep. Wall Street, them MVS, them strategy is weak. Delta is killing me, collect the premium slow. But me move fast like the Ferrari, ready for the show. Options and the Greeks, yeah, me speaking like a tongue. We trading at the top while the losers get hung. Surgical. The math is the math. Loud smoke. The math is the math. Loud smoke. The math is the math. 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 Yeah, the math is the math. Me riding the wave, clearing all the path. High energy living, elite level play. Me print more money in an hour than your day. Easy money, baby, we don't even sweat. Funding the Bugatti with your biggest regret. Higher than the clouds, lower than your stop loss. The math is the math. You get got. Bomba clad traders. Bomba clad traders. Marco 3. Esta jugada es demasiado perfecta. Aquí solo entra el que sabe. Yeah. Baby, I slide en la vela. Entry clean, no fire en la escena. Moving like mad con la gráfica. You chasing cloud, I'm stacking la crema. Yeah. Got that Fibonacci lined up right. 618 hit, now we taking flight. Touch that zone, then boom, ignite. RR locked, it's a Friday night. She like que tú haces con esos números. Hace mami, yo calculo la luna. No feelings, just targets y estructuras. Stack profits con flow y con altura. Entrada perfecta, ey. Lo leo en la vela. Con flow y cabeza. Rayando esa tendencia. La entrada perfecta, ey. Marco con la receta, ey. De lunes a la fiesta. Take profit pa' la mesa. We don't chase, we let them come. Liquidity running while you playing dumb. Top down in that Lambo, son. But I charted that run since Candle One. Ella dice como tú sabías. Hace mirar delta, baby, poesía. Open interest, es mi guía. This not luck, it's geometría. She grinding slow while I mark my zone. Break up structure, now we in the zone. Trade talk, sexy, she moans. Hit the level like you own. La entrada perfecta, ey. Timing que calienta, precisión que revienta. Trade setup que alimenta. La entrada perfecta, ey. Stop tight como promesa. TP on la mesa. Tu clean pa' la sorpresa. Amor, con estilo y con datos.
Marcos trade, always prepared.
The math is the math.
Surgical logic, I'm in the zone.
Golden pocket, liquidate. Golden pocket, don't be late. Golden pocket, golden pocket, 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 pocket.
Wait for the math.
Wait for the entry.
Too easy. All in pocket.
Golden pocket,
Too easy.
golden pocket.
618. Surgical I'm in the zone.
Fibonacci, golden pocket. Marco Street. Always, always, always.
Too easy.
Just kind of check on the open interest. Did any of this change? Not really. I was checking like the reason on WoW I was in this chart. I was curious where the VWAP is, right? Yesterday's VWAP on perps. We're right there right now, so see if we can start getting above this thing. We're not, might as well leave that one on, right? Leave it like that for now. Because the spot one is like lower, right? We're already like doing our thing there. Dun, 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 dun. Not much going on though, right? Nice, chill, quiet evening before inflation data. How's all this stuff looking? The same thing, right after 200. God damn, god damn. I'll switch this back. Bring this over here. Oh my god, that is funny. Oh man, I don't know why my like X algorithm has just been showing me a bunch of traders that trade these low caps just getting fucking wrecked over and over, and they're like fucking blaming everybody else. Maybe the same story with these fucking people, man, I swear. Motherfuckers just crying, right? Don't know what they're doing and they're just bitching. Is it? What's a 30-minute candle close? Okay. Is that? Oh. We'll leave it up here, yeah. All right, the golden bucket. Open interest is starting to come down a bit, but not much. Bum, 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 bum. Dun, 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 dun. I kind of want to start playing with some of these grids, honestly. Boom, 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 boom. Thing is, I have to figure out like how much capital is worth deploying to these things. I like the sweet spot. It's like not too risky, but also like worthwhile running it and leaving the money sitting there. I'm gonna have to make a note of that. Probably what I'm gonna do for the rest of the summer, honestly, or one of the main things.
Marcos Trade.
Okay, we'll leave that there.
Exotic location, the water is teal. She's looking at me, I'm looking at the youth. 50 floors up, yeah, the balcony is wide. She's sipping on something, I'm catching the tide. You can flow with the island, so surgical entries, I'm in full control. Custom silk on, yeah, it's feeling like a dream. High tier analyst leading the team. High in the hills with a bad thing, yeah, yeah. Trading the value is a mad thing, yeah, yeah. Afrobeat bounce and the rhythm is right. We don't see the sun, we just own the night. The math is a luxury vibe. Inside the pocket, providing for the tribe.
Too easy.
Boom.
Smoke drifting through the ocean air. Hands on the curves while I'm watching the pair. 618 hit, now we're heading to the boat. Everything's light, yeah, we're staying afloat. Fashion and logic, the silhouette is keen. She's a masterpiece, I'm a ghost in the machine. Institutional flow, yeah, the volume is deep. Making all the profit while the water's asleep. Exotic life, surgical knife. The auction is balanced, avoiding a strife.
Golden pockets. Global profit.
The math is the math. High in the hills with a bad thing, yeah, yeah. Trading the value is a mad thing, yeah, yeah. Afrobeat bounce and the rhythm is right. We don't see the sun, we just own the night. The math is a luxury vibe. Inside the pocket, providing for the tribe.
Too easy.
The math is the math.
Interesting. So they're gonna have to investigate this a little bit. Probably gonna have to code it ourselves too, to be honest. But I can't imagine they have too much functionality on here.
Marco's trades. Is it real? Or is it just the math? Midnight static, staring at the screen again.
Midnight static, staring at the screen again. Watching shadows move where the trend begins. They call it luck, but I see the architecture flowing through the noise, a silent director. I'm a ghost in the tape, drifting through the range. Everything I love is starting to feel strange. Exotic views, but my
Can't be right.
the world moves slow, but the execution's quick. Sides of smoke curling like a Fibonacci line. Living in the future, leaving all the past behind.
Spaced out, floating in the value area. Digital soul, moving through the barrier. Melancholy money and the view is cold. Counting up the secrets that were never told.
The math is the math.
Why does it feel so lonely? 61-8 surgical. But I can feel the floor. Marco's trades.
Been 38. Boy, I'm tired. Fuck. Hard as a motherfucker.
Marco's trades. They didn't believe. The math did.
Up at 3 a.m. with nothing but a chart. Just a chart. No one in my corner, only data in the dark. Through the levels, nobody would ever validate. Studied ocean theory while they told me it was fake. Screens illuminating everything I sacrificed. Every loss a lesson, paid a very heavy price. Months of reading all the flow before it clicked. Now they asking how I move so cold and so equipped. Wasn't overnight, wasn't luck either. Was the darkest rooms, being my own believer. Math was all I had, when the doubt was loudest. Now the silence is different, when the P&L is proudest.
Made it out the grind with nobody watching. Penthouse now, but remember when I had nothing. Surgical precision, every entry calculated. They slept on the vision, now they standing there and waited.
Cold execution, build it from the bottom. Every sleepless night is something they forgot about. Cold execution, math is my religion. Not a Bugatti sitting pretty, that's the only decision. They laughed at the screens I had mounted on the wall. Risk management spreadsheets covering the hall. Back testing every setup while they party through the night. Reading institutional footprints underneath the light. VY deviations map before the open bell. 0.5 retracements, knew those levels well. 618 confluence stack so clean. Built the whole foundation on what nobody else could see. Ferrari wasn't motivation, it was consequence. What happens when the discipline outgrows the evidence? They want the penthouse view without the lonely nights, without the years of getting it wrong before you get it right. Wasn't overnight, wasn't luck either. Was the darkest rooms, being my own believer. Math was all I had when the doubt was loudest. Now the silence is different when the P&L is proudest.
Made it out the grind with nobody watching. Penthouse now, but remember when I had nothing. Surgical precision, every entry calculated. He slept on the vision, now they standing there and waited.
Cold execution, build it from the bottom. Every sleepless night is something they forgot about. Cold execution, math was my religion. Got a Bugatti sitting pretty, that's the only decision. Only one, nobody called.
Tokyo 2-step targets for gold.
Earning respect.
Um,
Blew it, build it back up, build it. Cried over losses, never gave up. Told myself the math would eventually land. Now the jet is fuel, and I'm the one they call the man.
oh, gold.
They never saw the pain, they only see the Lambo, they only see the change. But I remember every candle, every loss, every night.
I mean, I'd definitely be aiming up here, right? Like the 200. It really depends, right? I don't know where you got in. I don't know like what time horizon you're trading on. I don't, you know what I mean? Quite subjective. Like for me, as someone that like entered the silver trade on leverage, like I'm gonna be like equivalent targets to this. Yeah. But definitely be looking to take some off here and then like kind of just let the rest go to sweep these highs. And then kind of go from there. So if not, it would be quite wasteful, right? If you got in, like, I mean, I don't know where you got in either, but assuming you followed the plans that we were talking about, you're probably in from like here somewhere. It'd be like quite wasteful to just like have this do this. And you just like round trip the whole thing. As Peter Brandt calls it, a popcorn trade. Pop up and come right back down. So yeah. I'd probably be looking to take some off there. And it might maybe even like lower just in case. How's the volume looking? Yeah. Looking like a pretty good spot to me. Boom, 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 boom. Boom. Oh, give me a sec. I'm kind of curious about one more thing. I mean, starting to see some divergences in the higher time frames, but nothing particularly crazy, and it might get invalidated if it keeps going, right? So yeah. Do whatever you want to do though, right? Don't gotta listen to me, I'm just a random guy on the internet. Also, like, quite like psychological target too, right? 4,500 on the dot. Quite the interesting coincidence, I suppose. Yeah. Shout out to the medals though.
Trading on data, escaping depravity. You're long in the wick, you're losing your head. I'm stacking the millions, I'm staying ahead. The math is the math. The math is the math.
Go to the math. Oh my gosh. Bum, 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 bum. 30-minute candle, hourly candle coming in hot. Okay. Okay. Okay, cool. Leave that like that.
Santorini sunset, love. Santorini sunset, laptop on the wood. Trading from the villa, yeah, the levels looking good.
Oh my god.
Got a dark skin beauty, she's a 10 out of 10. While I'm checking on the Greeks, then I check him again. Glitters on our side, yeah, we're soaking up the sun. By the time the candle closes, yeah, the work is already done. No stress in my spirit, no fear in my soul. Yeah. Just a pixel perfect entry, yeah, I'm in full control. We don't trade on feelings, we don't trade on hope. We just ride the volatility like a tightrope. From Valley to Ibiza, yeah, the view is elite. Watching all the top longers facing defeat. The math is the math, yeah, the math is the math. Living my best life. Clearing out the path. Exotic locations, yeah, the energy is right. Printing all the blue while we're dancing through the night. Easy money, baby, and a girl is divine. Levels on the screen and the hand is in mine. Yeah, we got them. Exotic vehicles parked out on the sand. I'm a global citizen moving through the land. Implied volatility, yeah, we sell it to the crowd. Blowing on that Zaza, yeah, the flavor is loud. Wall Street's hating, yeah, they're stuck in a suit. While I'm in a linen shirt eating fresh fruit. The math is the math, it's a global language. Leaving all the emotional traders in damage. Global flow.
My gosh.
Target hit. What you bring. The math is the math, yeah, the math is the math. Living my best life. Clearing up the path. Exotic locations, yeah, the energy is right. Printing all the blue while we're dancing through the night. Easy money, baby, and the girl is divine. Levels on the screen and the hand is in mine. Different time zone. Same
Bum. Oh, I'm gonna get rid of this line too, right? Bum.
Marco's trades.
Goddamn.
The math is the math. I can't get it out of my head. The math is the math. I can't get it out of my head. Midnight glamour, glass of the finest gold. I'm looking at the candles, watching the truth unfold. They tell me I'm obsessed, they say I've gone too far, but I'm just scanning levels from the back of the car. 618, the rhythms in my veins, institutional flow, washing away the pains. Always planned, always prepared for the strike. I've got exactly what the market makers like. It ain't no fun if you don't cross the line. I'm hunting for the value, yeah, I do it every time. Did they tell you I might be out of my mind? Or just the only one who left the noise behind? I got trading on my mind. The math is the math. Inside the value, yeah, the rhythm is divine. I got trading on my mind. Too easy. I got trading on my mind. Easy. I got trading on my mind. Skinny margaritas, but the profit's looking fat. Don't stand against the wall. I'm way beyond all that. Custom silk is flowing. The auction's in a groove. I'm already in position before the price can move. Zaza smoke is dancing with the strobe light glow. Surgical with entries, watch the liquidity flow. Luxury and logic, yeah, they're fused into one. The day is just beginning when the trading is done. Value area high, value area low. It's the only thing I see everywhere I go. The math is the math. The math is the math. I got trading on my mind. The math is the math. Inside the value, yeah, the rhythm is divine. I got trading on my mind. Easy.
I'm falling asleep. Goddamn, we gotta do a juice box pretty soon here. Or else I'm gonna just literally just fall asleep. Boa.
Marco's
Putting me to sleep. God. That.
Marcos Trace. Them naughty still. Zaza in the air, on the level them set. Level set. Pull the trigger up on the trade and no break or sweat. No sweat. Push on my floating but the mark still sharp. 618 the entry, hit it right. Panama. Them a stress the charts and still can't read that thing. Can't read. We a vibe on the rooftop while the prophet sing. Half asleep at open bell. Position already right. Already. Close the trade by noon and book a flight that night. Book it. They are work so hard, then still I miss the move. We are barely trying and we
That shit is nuking right now. God. Damn.
the match still cold. Hiding and the story still told. Hiding, still out performing everybody. Load pot burning what we profit. Ain't nobody stopping we. Nobody. Them a cry about the market. We all laugh from the penthouse view. Hiding, they
Oh my gosh.
Wall Street in a panic, we are at the room service. Them up here for algorithms we built us from purpose.
Any questions in there, a bitch or not? Or not? 3 minutes, 2 minutes actually until the 30-minute candle, hourly candle. Okay. Boah.
Marcos Trace. Mop still sharp. Got him always. Marcos Trace. Yeah. Check the tape. The map. Got him. Rolling through the city, windows tinted, moving slow. We don't shop to play, we just let the P&L show. Me and the gang in the lab, focused on the tape, while the retail's trapped, looking for a clean escape. Wall Street's looking at the order flow, scratching their heads. We're in the golden pocket, tucking top long as the bed. It's a unit, it's a squad, every entry is a strike. Moving as a shadow, tell me what that's like. They trade on the feeling, we trade on the grease. They're looking for a hero, we're looking for the leaks. Implied volatility, we're selling them the dream. While we're stacking up the blue, the elite level team. Moving as a unit, clearing up the path. Wall Street is envious, the haters feel impressed. Cause we're living lavish, put the numbers to the test. From the penthouse view to the exotic fleet, running the whole game, keeping it discreet. The math is the math. Yeah, you got 'em. Ferraris in the line, yeah, we move like a convoy. You're playing with your rent, we're playing with the big boys. Staters on our side, watching premiums decay. While you're short in the bottom, having such a bad day. The Zaza's in the air, but the focus is precise. Never ask the market, we just dictate the price. Haters talking loud, but their balance is a joke. We're signing off the wire while they're going for broke. Locked in, locked in. Levels hit. Targets rigged. The gang is fed. The math is the math. You got math is the math. Yeah, the math is the math. We're moving as a unit, clearing out the path. Wall Street is envious, the haters feel impressed. Cause we're living lavish, put the numbers to the test. From the penthouse view
Okay.
Marco Strays. You know what time it is. From the charts to the rate. Yeah, we measure precision. Hit that level, then I peel. Stack so clean, look how it feel. Previous day, high get drilled. Caught that wick, not a bag. Real. Fibonacci in my scope. 618, that's how we float. They chase green, we just ghost. Matt too clean, yeah, we do the most. Ice cold, but the setup. Warm value area low, that's a quiet storm. Delta pop, I'm already on. One click, whole move, get gone. POC like a pressure point. Push that level, then flip the joint. Options, Greeks, I don't disappoint. Gamma pin, I break the joint. No guesswork, I laser in. Oh, I shift, that's where I win. They see candle, I see trends. Stack them highs, do it all again. Zero draw, but I still get rich. Stop loss tight, whole plan still.
We're gonna start to flip this zone. We're not. These are starting to go, interestingly enough. I cannot wait till this mouse comes. God damn. I should have been. It was out for delivery yesterday. I don't know what the fuck happened. And didn't come today either. Imagine it got lost. I'd be so salty. I'm not gonna be here after that. If they like delay the shipping, it's gonna end up just being left on my front porch when no one's here.
Hit that level, then I peel. Stack so clean, look how it feel. Previous day, high get drilled. Caught that wick, not a bag, real. Fibonacci in my scope. 618, that's how we float. They chase green, we just ghost. Matt too clean.
Also,
Stack it, flip it, lock it, vault. They still guessing, that's they fault. We play edges, they play coat. I trade facts, no need to halt. Nah. The mad Marcos. Michael
Seeing the tape, calculated move, there is no escape. VIP booth, but the laptop's glowing. Institutional volume, yeah, it's overflowing. Surgical with it, the entry is tight. We don't chase the pump, we just own the night. Look at the wait, wait for the signal. Click, click, click.
I can't stop.
Trading on my mind, trading on my mind, trading on my mind. The math is the math. Too easy.
boom.
Strange.
Don't piece, I watch flow like it's so leak. In the tape, I find the sneak. Exit hit, I don't repeat.
God damn, god damn. Starting to fall asleep here, god damn. I cannot wait to go back home. I've an elite date planned right when I get back. Taking a fucking private plane ride over the Niagara Falls. Boy. Might die, right? Guys might never see me again. Yeah, I don't know the plane statistics, but I'm pretty sure that's like the highest probability, a chance of a crash in a like any kind of flight. One of these like privatized flights. Might get my ass lagged out. Salesforce AI 9, yo. Salesforce. Are you a Salesforce bull? That is funny. Bulled up on Salesforce.
Yeah. Slow cruise.
Bum, bum, ba, bum,
High stakes.
bum.
Fam only know outsiders. Marcos. Yeah. We trade with the game, move silent, but they loud when they numbers on the screen stack clean. Now we double that quick.
How is Salesforce doing anyways? Curiosity. Starting to bounce it back. I think it's almost at all-time highs again. God damn. Put the Salesforce. Okay. Any questions, my boy, or no? Or no? Because now we're about to start wrapping this thing up. Poor girl. Guess we don't know. We don't know much about Salesforce here, do we? Dun, 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 dun. I mean, in terms of the juice box, not gonna be a particularly interesting one today, right? Because like the short opportunity that we talked about and the long opportunity we talked about yesterday both played out. So at this point, just kind of just waiting for the higher time frame levels. Hmm.
The math is the math. I don't do guesses. Nope. Lambo mad black. I draw it presses. Girl Scout smoke. Cookie chart got blessings. You chase green dream, huh? I chase addresses. Stats on
Yeah, I don't know. I don't know how people are like so convinced this is the low, right? Like if you're looking at this chart, are you really thinking this is the low right now? We haven't even broken the 382 retracement once. I don't know if I'd be too bullish right now. Especially if the data that comes up tomorrow is gonna be quite interesting, right? Like this inflation data. Because after that, until like Jackson Hole, that's basically gonna set like the tempo, like to the end of the month. Tomorrow's data and the day after is basically gonna give us like the insight on the rate cuts or hikes. Or like no cut, but like basically like insight into the probabilities. So we can might see some like serious de-risking tomorrow. And the other interesting thing about tomorrow is there's no consensus on the number, right? So even in terms of the expectations, like some people are gonna be interpreting it differently based on the expectation they have. It's a very, very interesting day tomorrow, to be honest. Get rid of this thing. Also close this. Actually, we'll answer this first and then chill. Let's just throw the box on this bitch. Potential longs. We'll kind of start off with the usual, right? We'll kind of stick with the usual. Higher time frame plans have been discussed in previous streams / Discord. This applies to both the long and shorts, so yeah, all the stuff like down here, all the stuff up here, been discussed plenty of times, so yeah. And in terms of the lower time frame things, hard to say, right? I mean, the most obvious area is going to be like, would obviously be like just this negative point of control, right? The golden pocket and the POC. But like, given some of the context that we were talking about with like these candles and these candles in terms of the open interest, it's gonna be the same story as yesterday, right? Like, do you really want to risk potentially getting squeezed out with the rest of these shorts into the highs? Depends how the open interest data is looking. As of now, barely any closed out on this initial move up. So yeah. I mean, maybe you want to entertain this like kind of 786 negative point of control here. In terms of this whole volume. Again, tricky, right? Quite gonna be quite open interest dependent and dependent on what's happening with these two. Like the main cluster on the lower time frames is up here right now. So like maybe we just kind of like pierce the value area high, sweep that, and then come right back down again. So yeah, be mindful of that, I suppose. But we already talked about these higher levels, right? We've talked about these, like, I don't know when it was. Probably sometime around this time, right? Must have been. So it kind of just falls into the same plans up here that we've already written down. Yeah. Keep that in mind. And like it's like 886 negative point of control. It's like same kind of story, right? We talked about it earlier in the stream today. When would it have been? I don't know. We were talking about it earlier. I think at some point we had this fib drawn and we were talking about this level. We talked about like the typical concept of like when you're like right near these like risky ass zones, typically don't want to just be getting filled on limits right before it, right? Yes, is there a world where it bounces? Sure. And like if I suppose if you're starting to see that the move's getting like overextended in the lower time frames coming into here, and like this open interest situation has resolved itself, like yeah, you can try and entertain it, or maybe take like a low time frame structure change, like the right side of the V as they call it, right? But a better bet is going to be like let something strong print down here, right? Whether it's some kind of like inverse head and shoulders or like a 3 drives, and then like it reclaims the VWAP. Like a much safer, higher probability chance of getting the bounce to get out break even if it does end up reversing on you, as opposed to just taking the limit and just blow straight down to the level. So kind of context dependent, data dependent. It can't hold your hand, unfortunately, right? If it was happening while we were on stream, sure, but who knows, right? Can't break the future, who knows? Yeah. So we'll kind of just write all those down, right? Just for the sake of leaving them written down. Kind of like 886 NPOC. And then this would be like the golden pocket, naked point of control at the previous week point of control. And then like the 786 one. But keep all the context that we talked about in mind, right? And like as usual, the higher time frame plans are usually going to be the higher probability, juicier trades. And I'm just thinking in terms of this thing, right? Like we were like when we first got on stream, we were talking about like, does this thing end up like failing at the lows and reclaiming the zone or not? The only problem with like waiting for this like potential structure change up here, like suppose you didn't take the initial break and have your stop like wherever you want to have it, like whether it's here or here. Like if you wait for this one now, like if it bounces here and then it changes, like it might reverse right here, right? So like the chance of you getting out break even if you take this one is like quite low. Well, not quite low, but like a lot lower than the other two. And ideally, like we were following along with yesterday's plan and you're in from like here. Yeah. And same with the short, right? Ideally, you're in from like in this region. Like I had multiple opportunities to get into both of these. So like, kind of the ones that we're discussing now in terms of like weaseling in is like suboptimal. dun, 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 dun. Where is this thing? Like maybe you can look for like a breakdown of the low in terms of a short. If we start to lose a Valeria low, like that kind of thing. Where's the view up off the low at? And maybe you can weasel your way into the move if we could start heading down from here. At that point, it's like we're doing like the second retest of the golden pocket and starting to lose a Valeria low. But yeah, again, like that's like a low edge trade, risky. If you are going to entertain trying to get on the breakdown from down here into this lower levels, low position size, etc., and it might just like sweep the low and put in like a strong buying tail and just reverse and start going for real. So yeah, we'll leave that all written there. Keep that in mind. Other than that, yeah, I mean, in between what we discussed and what we wrote down and what we've talked about in past streams, kind of cover all our bases there, I think. Did you miss anything particularly interesting? Bum, 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 bum. Yeah, not really. Not really. Starting to look a little sus though, we'll say that, right? Potentially, like losing the 50 again. Like potentially like rejecting off the point of control after losing it. With some big ass magnets down here. A little suspicious, we can say. Yeah, there's no questions. Probably gonna head out of here. I have an alarm for 11:30, so we're 5 minutes early right now. I gotta prepare some shit for tomorrow. Yeah. And in terms of the stream, we should be streaming again tomorrow, but tomorrow might be the last stream until like September probably. Oh, almost certainly it's gonna be. Actually, TBD. Because like I have plans Thursday night, but maybe we'll stream Thursday during the day if we can find some time. And then that would quite likely be the last one, because at Friday I'm out of here. I gotta like pack stuff and then I'm out. So yeah. After that, we'll kind of be back on the Discord grind, posting stuff in there regularly. Might not be doing daily posts. I mean, we'll see. I guess it depends if anybody gives a fuck. I think maybe we'll kind of post some TradFi ideas we have. Because the thing about Bitcoin is like lately is just not really much to talk about, right? Like there's no point in posting in there daily if the update's just gonna be like, well, nothing has changed from yesterday. Nothing has changed from yesterday. Like, yes, we can like sit here talking about these like lower time frame scalps, but it's like sometimes it's not even relevant, not even worth it. So, but if there's, as usual, if there's anything like really worth putting in there that's actually worth updating, like that, like immediately that will definitely be going in there. And other than that, yeah, not too much to yap about, right? I guess at this point we're just kind of sitting on our hands waiting to see what happens with this data tomorrow. I guess we could have looked at some of the option stuff, but didn't. Fuck. It's okay. I mean, I always look at it in the morning anyways, so it's kind of this part of the morning habit, morning routine. In terms of you guys, yeah, you're gonna have to do it yourself, unfortunately, this time. I'll make a note tomorrow to do it, just so we kind of leave on a similar page. Options page on stream. Okay, cool. Other than that, yeah, not really much to really. So far, not looking particularly great here, right? How's this looking? No, ideally, like we pierced the zone and held this, right? And like next thing, obviously, like don't want to start to spend time below this. If we start to spend time below this and we start to like lose the open and start to lose this, starting to like continues to like a week, right? And like this same with this, right? Like sure, maybe we tolerate coming down and clearing that. But same story, right? We don't want to be spending time below the Valeria lows of these TPOs. Yeah. Anyways, I'm out of here. That should cover it for now. Let's do a quick chat shout out. Shout out to Tokyo 2Step, our gold, our gold man. Shout out to Salesforce AI. It might literally be a fucking AI for all we know. That should do it, right? I think that should do it. Yeah. But anyways, whatever. We'll be back tomorrow. Kind of usual shit. Get caught up. And then from the future onwards, from there, we'll see, right? We'll have a better idea as time passes. For now, it's time to get ready for bed, get ready to get a good night's sleep, make sure we're dialed and awake in the morning. Yeah. And I am out of here. Later. Later, boy.